Hey, I want to welcome into the program economist Dan Varroney. Dan, we're so many days into Iran. Oil's down, the stock market's up, and I don't understand why. Can you tell me?
Sure. Let me just talk about the broader economy. The stock market is up because the oil companies are doing really well. The Mag 7, the Magnificent Seven technology stocks are doing really well. But the other thing I can tell you, what's interesting, Matt, is that year over year, April 25 to April 26, that consumer spending was 5% higher. Amazing, right? 5% higher.
Yeah.
We still had 2% growth in the first quarter. The Atlanta Fed, I checked this morning, is forecasting 4% growth in the second quarter of this year, in large part due to the consumer staying in the game.
All right, but let me ask you, because I'm getting ready to do a segment here coming up the bottom of this hour, student loan debt bomb. We've got people financing their lives on credit card. That's a bad thing, right?
It is a bad thing. So what's happening is that, well, let me just tell you that $45 billion more being spent on gasoline compared to 1 year ago. $45 billion. So that's money that individuals and families couldn't spend on food, car loans, mortgages. That's money out of the economy. So in some cases, what's happening is people are putting their spend on their credit cards in order to get week to week and month to month.
So let's talk about these U.S. Treasury yields. I'm seeing it all over social media. They're going up. Why?
So they're going up for a couple of really interesting reasons. So essentially what you have is that the federal government, dating back to COVID, and then in the last administration, there was a spending bonanza. And what you have is you've got the country swimming in a sea of debt.
Mm-hmm.
You've got the bondholders saying, so unless we get some guarantees from the Federal Reserve or other places, we're going to start charging more interest. So they're charging more interest on the 30-year and on the 10-year. So when you see the 30-year, now it's up over 5%, you're going to start to see likely mortgages are going to go up. The figure that always makes me nervous is the 10-year.
Mm-hmm.
That is still under 5%, that needs to stay under 5%. But I will tell you, Kevin Warsh, the new Federal Reserve Chair, is walking into a lot of challenges.
Well, I was going to ask you about that. We do have a new Federal Reserve Chairman in Warsh. You just hit that. You know, we got Powell out. But here's my question. As these rates get higher, normally if you tax something, people buy less of it, correct?
That is correct. So I have an op-ed that was published last week that I forgot to send to you and your team talking about Kevin Warsh's and his new challenges. It would be a tremendous mistake to increase rates because the consumer is going to pay for it in the form of credit card debt, auto loans, mortgages, and small businesses are really going to get squeezed, and they are already squeezed. Big mistake to raise rates. And I actually will be writing another op-ed, putting a marker down saying a mistake to raise rates at the June 16th and 17th meeting.
All right, I don't want to get too into the weeds here, but we've got a lot of debt in the situation here. How do we get it out? How do we get all this money out? You know, we poured a lot of money into the economy. Now it's sitting there causing us a bunch of problems.
So there's a couple of ways to do it. One is, yes, we can grow our way out of the economy. That's what the big, beautiful bill is intended to do. It cut tax rates. Average refunds are between $3,200 and $3,800. So people have cash in their pockets from that. There's more cash in the pockets from lower withholding rates. Mm-hmm. So when we see those retail sales numbers holding up, I think in large part, it's the tax refunds. It's the no tax on tips. It's no tax on Social Security. I think that's helping. But I think the other thing that's got to happen is the war in Iran needs to come to a close, because I think once that happens, we will lower the spend on gasoline because gas prices will come down, and things will get a lot more affordable for all of us.
Well, let's talk about this, though. We're now in May. School's getting ready to end. Parents are going to want to start going on vacation. You know, they've worked all year, put a little nest egg away to go to maybe Destin or enjoy a beach somewhere. It's going to be more costly, right?
It's definitely going to be more costly. Bottom line, will be far more costly. And in some cases, we'll see if the vacation plans hold up, primarily because what you have is it's the cost of gasoline.
Mm-hmm.
That's the cost of gasoline.
So here, final thing, and we got about a minute left here. You know, if you got your crystal ball out, how good do you feel about, you know, second quarter here? We're almost to the end of it, of course, in June. What's it going to look like? Are we going to see the golden age of America, as President Trump keeps saying? We need to get out of Iran, of course, but what do you feel like is going to happen over the next month and a half?
So I think we'll see about the same until the Iran conflict ends. Once the Iran conflict ends, I think that we will actually move quickly toward the golden age of America.
Boy, I hope you're right, Dan. I love that attitude, by the way. I'm ready for the golden age of America myself. I'm ready for America to go boom, boom. It's the 250th birthday. We should be celebrating all that stuff. All right, Dan, where can my listeners find you?
They can find me at danielvarroney.com. They can buy my book, Rethinking Economic Growth, at amazon.com. And they can also find me at potomaccore.com.
There you go. Go find him, Dan Varroney, economist. Certainly appreciate you taking the time to hang out with me here on this Monday morning.